Hi everyone, good to have you in class today. This is A Plus Academic Resource Center where we take online tutorials for undergraduate and senior secondary students, okay? My name is Chinedu. Alright, today we'll be continuing from our previous class, okay? I'll drop the link to the previous class on, I'll post the link so that you can both pick up from there. Or just check our playlist under financial accounting, you will see it there, okay? Alright, so we'll be solving for ledgers and then our trial balance. Remember, we have done the cash book, we have done the subsidiary books, we have done some parts of the ledgers, like for 2 of our customers, we have treated for that, okay? All right, so we are going to continue from where we stop. All right, so we are going to be looking at Femi's account, credits, debits. Now remember, the question required us to solve 3 things. Number 1, the cash book. Number 2, post the entries to the ledgers. There are various ledgers. Number 3, draft a trial balance. So we have answered number 1, which is the cash book. This is the number 2 now. We have also, under the cash book, we have also posted entries in the various subsidiary books. Now we want to post to the ledgers and then draft our trial balance. Okay? So now let's go. Femi's account. On the 6th of January, we sold to Femi 220K. Sorry, please, I'm going to be using K because of space so that we'll manage our board, okay? All right, then on the 16th of January, return inwards, okay? Femi return goes to us, what, 20K. Then on the 18th of January, he paid us with check, that is bank, 95K. Okay, then on the 18th as well, we allowed him discounts of how much? 5K. Now let me quickly explain something here. You see, this is a ledger. Remember the double entry principle. Every debit entry must have a corresponding credit entry. I will take my time to explain this so that other ledgers will just be posting, and because I don't want the class to be too long. So please listen attentively. Now, this is the ledger. A ledger is an individual account where all transactions pertaining to individuals or individual accounts are posted. Okay? Now, this is the credit side, this is the debit side. In our cash book, you know, it's a 3-column cash book. We did have the discount column, the bank column, and the cash column. Now, let me take bank for instance. The bank column in the cash book, if you check on the 18th, you will see Femi's name there of 95K, where he paid us 95K. Okay? Now, the debit side of the cash book has Femi's name. Now, to complete the double entry principle, the credit side of Femi's account will have the bank, which is this. So every debit entry must have a corresponding credit entry. The transaction, the entries on the debit side of the cash book will now be the account, the heading on the credit side for the credit side of that same transaction. I don't know if you get it. Let me take another one for instance. Return inwards now. The return goes to us. Okay? We are going to, you see this, you see return inwards is on the credit side of Femi's account. When we open return inwards ledger, return inwards book is different from return inwards sales return. It's not the same thing with the return inwards accounts or ledger. Excuse me. Return inwards book is not an account, it's a book. But the cash book is a book and an account. It performs dual functions. I don't know if you get it. So return inward book, that is a return inward book or sales return. It's not the same thing with return inwards account. So all we have done for return inwards now is just one side of the transaction. So when we open return inwards accounts now, we will now have to debit Femi's name with return inwards. Don't worry, when we get there, you see. So I'm just trying to explain the double entry principle for you so that you will understand it. Okay? All right, so let's move on. So now, let me state this as well. Now, on the debit side of Femi's account, this is in our own books now. In our own books, this is Femi. In Femi's own book now, the reverse here will be the case. these sales will be purchased, all these entries on the credit side will be on the debit side, with their particulars having a different name. Okay? Now, debit side here is what Femi is owing us, while credit side here is what will reduce the balance or anything that Femi is owing us. So we have to add this, deduct it from this to get the balance that Femi will have to balance us. I just want to explain in simple terms that you can understand. We'll add everything we have here, deduct it from this. Whatever we have left will be our balance carried down, and that will be what Femi is owing us. Because Femi is a debtor to us, not a creditor. Okay? Okay, let's move. So let's add up this point. We have 20,000. 20,000 plus 95,000 plus 5K. This is 120K, okay? Minus 220K, which is 100,000. Which is 100,000. So we have 31st of January, balance carried down, 100K, okay? So we have 220K, we have 220K. Make sure you rule your double line on that to show that, yes, you have concluded the transaction. Now, balance carried down is on the credit side. Then, 1st of February, we'll have balance brought down, which is 100K. So this is the balance. So on our ledger, on our trial balance, this is the balance we'll work with. Okay, let's proceed. The next on our list is Musa's account. Musa's account. Are you following? Are you with me? On the 12th of January, we sold to Musa how much? Goods worth 140,000. Then on the 29th of January, Musa paid us via check. Okay? How much? 50K. So Musa, we sold to him goods worth 140K. Then on the 29th, he paid us 50,000. Remember I told you, for a debtor's account or somebody that is buying from us, okay? A debtor is someone buying from us, someone that is owing us, okay? For a debtor's account, you will always reduce what he paid you or she paid you from the total goods you sold to him or her to get the balance that he has to balance you, okay? So 140K minus 50,000, 140 minus 50,000, we have 90,000. So our balance carried down, 31st of January, balance carried down is 90,000. Okay, so we have 140K. Please, don't write K. I'm using K because of our space, okay? Write your figure in full, okay? So we have 140K. So balance 1st of February, balance brought down, which is 90K. So let's continue. The next is Akin account. Okay? So who is Akin to us? Akin is also a debtor, a receivable, okay? So we have on the 17th, we sold to Akin goods worth 18K. Then on the 31st, now on the 18th, goods worth 13K. Let me see. We received okay, sold goods, normal selling price 20,000 to Akin, giving trade discount of 10%. So 10% 2,000, then the balance is 18,000, okay? So balance carried down, 31st of, on the 17th, if you check your question, on the 17th, you see it, sold goods, normal selling price to Akin 20,000, giving trade discount of 10%, okay? You see it there. So we have balance carried down, 31st of January, balance carried down, 18K. Okay, so that's that. Then 1st of February, balance brought down, which is 18K. Are we together? Then the next is Ada. Okay, so we have, who is Ada to us? Ada is somebody we buy from. She's our supplier. Okay, so on the 4th of January, we purchase goods worth how much? Worth 180K. Okay, then on the 31st of January, yes, we paid her by check. How much? 80,000. So our balance now that we have to balance her is 100,000. So we have balance carried down 100K. Okay, is 180K. You rule 180K. Okay, so balance 1st of February, balance brought down, which is 100K. I hope it's getting clear. Okay, so let's proceed. We have the next person, SA. SA's account. Okay, who is SA to us? SA is a supplier, somebody we buy from. Okay, so on the 10th of January, we purchase goods worth 100,000 from SA. Then on the 25th, we return goods worth how much? That is return RO. I just shortened it, okay? This is return outwards. On the 25th, we return goods worth 5,000. On the 27th, we paid her in cash 18,000. Then on the 27th, okay, we received discount from her. Discount to receive, DR. I just shortened it. Discount received, okay, of 2K. All right. Then now, let me listen to this. Femi is somebody that buys from us, while SA is somebody we are buying from. Excuse me. Okay. So you see the difference now. This is sales. This is purchase. Okay. So whatever that we reduce the amount we are owing SA, it's on the debit side. So all these things are transactions that will reduce this amount to give us the balance we are to give her. So we have 31st of January, balance carried down, which is, let's see, 5,000 plus 18,000 plus 2,000, which is 25,000, okay? Minus 100,000, which is 75,000. That's what we are to balance SA, okay? 75,000 naira. So we have 100K. So we have 100K. So 1st of February, balance brought down 100K. I hope it's getting clear. All right, so I'll have to turn the board now, okay? Please use the comment section. Anywhere you don't understand, ask me questions, okay? Do not forget to subscribe, like this video if you are getting value, share it so that other people can see it. Okay, I'm going to turn the board so that we'll continue. Are we together? All right, so the next on our list is OK. This is OK's account. Okay, debit, credit. Okay, so on the 26th, who is OK to us? OK is somebody we buy from. Okay, we purchase goods worth 63,000 naira. Okay, now that's the only thing there. There was no other transaction we did with him. So we purchased goods worth 63,000. So we are owing him 63,000 naira. Balance carried down 63K. Okay, 1st of February, balance brought down 63K. Okay, so we have a capital account. Okay, so capital accounts we commence business on the 1st of January. where use our bank balance to start this business. Capital is what used in starting a business. If you go to our question, you see it, okay? So we have on the 1st of January, we have bank, okay, 720K. I think that's the only transaction. Then 31st of January, we have balance carried down, which is 720K. Okay? So 1st of February, balance brought down to 720K. All right, the next is rent account. Rent account, okay? So rent account, on the cash book, we paid rent, okay? On the cash book, we paid rent on the 7th. If you go to cash book, our cash book we did before now, you will see rent there on the 7th, okay? On the credit side of the cash book. So to complete the double entry principle, we'll do that on the debit side of rent account, okay? So 7th of January, we have cash by rent. Sorry, rent by cash, 25. Okay? So 31st of January, we have balance carried down, 2005. Okay? 1st of February, balance brought down, 25. The next is drawings account. Drawings account. Okay? So, drawings account on the 9th. On the 9th, we withdrew cash. If you check our cash book on the 9th, you will see cash that we withdrew. Okay? 9th of January, we have cash, which is 3K. We have on the 15th. On the 15th, where we will withdraw goods for personal use. And if you check your cash book on the, sorry, if you check your journal proper on the 15th, you will see that transaction there. So we have purchase of 5K. Then on the 31st, okay, on the 31st, we withdraw cash again for office use. If you check our cash book, you will see it. Okay, which is 3K. So the total of it is 11,000, 8, 9, 10, 11. Balance, sorry, 31st of January, balance carried down, which is 11K. Okay, so, which is 11K. So on the 1st of February, we have the balance brought down, okay, which is 11K. Sorry, there's no space here, but you know what to do. Once we have balance carried down here, we should have balance brought down, okay? All right, the next is the purchase account. Purchase account. The purchase account, we have on the 14th, we purchased by check, okay? 14th, if you check our cash book, you'll see this transaction there. How much? 40K. All right? Then on 15th, we withdrew from goods. Now, this purchase now, see it here. Drawings. Okay? Drawings. 5K. See this purchase. This is the double entry principle now. We have just done. The journal proper is not an account. So that one is not, it doesn't follow the double entry principle. It's not an account. Drawings account. Purchase was debited. Okay? Now, purchase account, drawings is credited. This is the double entry. Are you following? All right. So now we have on the 31st of January, we have trade payables. Let me shorten it. Trade payable. This is trade payable. This trade payable, if you check your purchase day book, okay? If you check your purchase day book, the total of those transactions Purchase day books. Purchase day book is where you record goods bought on credit or purchased on credit. Okay, that's the purchase day book. So the total of those transactions there is what we call trade payable. So you bring it to the debit side of purchase account. Remember I told you the purchase day book is not an account, it's a book. Only the cash book serves as a book and as an account. So pick what the total of the trade transaction, purchase transaction in the purchase day book and post on the purchase account. So the total of it there is what we have as 463k. All right. So we'll add this and do our balance carry down. 31st of January, balance carry down. So let's add 40,000 plus 463,000, which is 503,000. Okay, 503k. So the balance 503k minus 5,000 minus 5k, which is 498k. Okay, so we have 1st of February balance brought down, which is 498k. I hope it's getting clear. This balance brought down, 31st of January has ended. So the balance brought down will be the next month or the next day, or the next period, which is the next month actually, because this is a monthly transaction. Okay, all right. So we have the next motor vehicle account. Motor vehicle account. Okay, motor vehicle is an asset. So motor vehicle, we bought motor vehicle on the 20th via check. Okay, we bought, if you check our cash book, you see this transaction, which is we bought vehicle of 100,000, 100k. So our balance carried down is still 100,000. Okay, so 1st of February balance carried down 100k. Sorry, brought down. Okay, all right. The next is the sales account. The sales account. Please, I need you to take note of these balances, because when extracting our ledger, we are going to need these balances. Please take note of them. These are balance brought downs. Take note of them. Take note of the amount. Okay, and take note of their side, whether credit or debit side. Take note of where they are located. We are going to use them on when drafting the trial balance. Okay, so the sales account we have. Please use the comment section if you don't understand anything or if you are not getting it clearer. Let me answer your questions. Okay, let's proceed. So sales account we have on the 22nd of January. We sold goods worth 25,000, that is 25k. Okay, then on 31st, the total on the sales day book, just like we did here in the purchase day book. So we have excuse me, we have trade receivable, which is 528k. So 31st, we have balance carried down. So we add what we have here, 25 plus 528,000, 25,000 plus 528,000, which will give us 553,000. So balance carried down is 553k. 553k. Okay? 553k. So 1st of February, balance brought down 553k. Are we together? All right, we're almost done. I'll have to wipe this place off, okay? So the next we have the salaries account. Salaries account, okay? So we have on the 30th of January, we have we paid salaries, cash. How much? 5K. Then, I think that's the only transaction for 30th. And 31st, we have balance carried down 5K. Okay? 1st of February, balance brought down 5K. All right? Then the next is return inwards account. The return inwards account. Okay, let me write this in full. Return inwards account. Okay? This is credit, this is debit side. Okay? So return inwards account 31st. Now, this return inwards account, we are moving the sundries or the total from the return inwards book. Remember, I told you return inwards book is not same as return inwards account. Okay? So we are moving the sundry just like we moved the total from purchase day book to purchase account. So we are moving the total from return inwards book to return inwards account. So we have 31st, which is trade receivable. Trade receivable 37K, okay? Then the balance, 31st of January, balance carried down, which is 37K, okay? So we have 1st of February, balance brought down, 37K. All right? Okay, so I don't know, that's all. Okay, we still have a few left. So we have return inwards, return outwards, sorry. Return outwards book. Outwards account, sorry. Return outward account. So the total from return outward book now, we are bringing the total from return outward book. So we have 31st of January, which is trade payable. Trade payable, 13,200. Okay? Then 31st of January, balance carried down, 13,200. Okay? So we have 1st of February, balance brought down, 13,200. Okay? All right. So the next one, we have discounts allowed. Let me write it in full. Discounts allowed account. If you remember, the cash book, the discount columns in the cash book, we did not balance it. We only totaled it. Because in the cash book, you don't balance discount allowed. Whether received, whether allowed, you don't balance it, you just total it. Discount allowed account and discount received account are to be created, which is what we are doing. So the total from discount allowed, you move it to discount allowed account. Okay, just like we have the purchase day book and the return inwards book. So we have discount allowed, but it's not a book now. It's a column in the cash book, but you don't total it. You don't balance it like you did the cash and the bank column. No, you only total it, then move the total to discount allowed or discount received account. I hope that is clear. All right. So discount allowed, we have the trade receivable. When you hear trade receivable, it's same thing as debtors. When you hear, don't allow terminologies confuse you. It's the same thing as debtors, people that are buying from you. When you hear trade payables, it's same thing as creditors or suppliers. When you hear debtors, it's same thing as customers, people that buy from you. Okay, don't be confused. So we have 31st of January, trade receivable. We have 8,000. Okay, 31st of January, balance carried down, 8K. All right. 1st of February, balance brought down, which is 8K. Okay, the last but not the least, discounts received account. Discount received account. Okay, so we have on the 31st, we have trade payable. Okay, we have 3,800. Okay, then 31st of January balance carried down, we have 3,802. Okay, so 1st of February balance brought down. Balance brought down, which is 3,800. So we are done with the ledgers. Please use the comment section, ask your questions anywhere you don't understand. Okay, are you ready? All right, this is the trial balance. We want to, remember I told you in our previous classes, trial balance is the list of balances extracted from the ledgers. These ledgers we just concluded now. Those balance brought down, where they are located. If the balance brought down is on the debit side, pick that amount, come to the debit side of trial balance and record it there. So trial balance is the list of balances extracted from the ledgers to test the arithmetic accuracy of our transaction, of our entries. So trial balance is not an account. It's just like a tool to test if our entries are okay, if our entries, our postings are correct. Do you understand? So at the end of the posting, your debit side must correspond with your credit side. If you have 100,000 here, you must have 100,000 on the debit side. The two sides must balance, must have equal amounts. That's what we are trying to say. Okay, so all those balance brought down, wherever they are located, pick them from there and paste them on either the debit or the credit side of the trial balance. I don't know if that's clear. Okay, let's start. So let's pick them one after the other. Let me just start. Let me just pick them randomly. I think I've extracted my own here already. I've extracted my own, so let me just write them. We have cash in hand. Cash in hand. Cash in hand is 64,500. Okay? 64,500. Cash in bank. Cash in bank is 594,000. If you check the cash book, you will see the balance brought down is on the debit side of the cash book. The balance brought down is on the debit side of the cash book. If you check the cash column and the bank column, you will see this amount. So that's why we are recording them on the debit side of the trial balance. Now, another way you can do this is this. Debit assets and income. Sorry, assets and expenses. Debit assets and expenses. Expenses or payments. While you credit liabilities and income. Liabilities and income or gain, you credit it. Assets, payments, expenses, you debit it. For instance, cash in hand is a short-term assets. Sorry, current assets. Cash in bank is current assets. That's why you see them here. Let me give another one. Femi is owing us 100K. He has a balance of 100K. Femi is a debtor. Debtor on the on the balance sheet is a current asset. That is why it's on the debit side. So you debit assets, expenses or payments. You debit it. While you credit liabilities, income or gain. Let's continue. So Musa is 90K. Akin is 18,000. Ada is 100K. Ada is a creditor, somebody we are buying from. We are owing her 100K, and in our balance sheet, creditors are short-term liabilities. Short-term liabilities. That's why you see them here. Then we have AC, 75K. Okay, let me use full, since we have enough space. Okay? Then, okay. we have 75K. Then we have sorry, not 75. Okay, is 63,000. Then capital. Capital is a liability, 20,000. Rent is payment, 25. Drawings. Drawings is payment also, 11,000. Purchases is expenses, 498,000. Let's continue here. So we have a motor vehicle. Let me So we have motor vehicle. Motor vehicle is 100K. Then we have sales. Sales is 553K. Then we have salaries. Salaries is 5,000. Then we have return inward, which is 37,000. Then we have return outward, which is 13,200. Then we have discounts allowed, which is 8,000. We have discounts received, which is 3,800. So we have posted the entries. So let's calculate now to see. So we have 64,500 plus 594,000 plus 100,000 plus 90,000 plus 18,000 plus 25 plus 11,000 plus 498,000, okay, plus 100,000 plus 5,000 plus 37,000 plus 8,000, which is 1,528,000. 1,528,000. So the credit side, let's go. 100,000 plus 75,000 plus 63,000 plus 720,000 plus 553,000 plus 13,200 plus 3,800, which is 1,528,000 as well. So the credit side and the debit side are now equal. So this is the trial balance. So all our entries from beginning, from the cash book to the end, is correct. Once your trial balance did not balance like this, know there is a problem somewhere. Okay? All right, we've come to the end of this class. This is the part 2 of the class we've been doing before. All right? So now you have a good understanding of how to treat the cash book, the ledgers, the subsidiary books, and the trial balance. All right. Thank you for staying to the end of the class. Please subscribe, share this video, like this video if you know that we're giving value. Okay? Thank you for your time. Enjoy the rest of your day.